Hey traders, this is Captain Jim James. If you're a new trader, if you're a trader that gets trapped in stocks or plays, if you're a losing trader, or you just want to get back to the basics, this video might be for you. Too often I see traders that are trapped, to be honest. These are new and older traders. This isn't just a small percentage of the traders that I talk to. It's a fair percentage. And the stats don't lie. Most of the stats say that as low as like 10% actually win over time. If you're here to make money, if you're in the stock market to make money, if you like GME and you want GME to go up, there are ways to trade it. And there are ways for you to always make money while trying to trade it. So we're just going to start here on SPY. You can make sure that you get yourself a platform that has charts. Robinhood, you can make your trades there. And I have made trades on Robinhood, but I never use it for charts. This is Webull. It's free. It's almost as fast as the high-end brokerages. Lightspeed, it's just almost as fast as Lightspeed, and it's free. It's real-time market data. So I'm going to use this one here. The key is to make sure that your brokerage or whatever charting app you're using has actual charts with price alerts that you can be emailed or texted. And Webull does offer that. And one more first note. There was a moment when I began trading, or there was in the beginning of my trading, I was making a lot of money. Lots. And eventually I started to lose a lot of money, upwards of $100,000 trades, $35,000 trades. And I would stay in them and lose all of that money. And I was so upset with myself that I stopped trading for a while. And what I had to do was stop trading and come back to the basics. And this is pretty much it, what I'm going to show you here, is coming back to the basics. I exited all of my positions in my investments, exited all of my options, and I came back to the basics. So let's look at them. And this is the SPY here in front of you. If you were to just start with this index, it tends to go in one direction over a lot of time. Now it does sometimes go down over time, but it will stay in that trend for a period of time. And you can still play that trend down on the up and down side. But you want to find an ETF with high liquidity, many expiration dates, trends in one direction, and it goes up and down a lot within that one long time trend. And I always recommend the SPY, especially to a new trader. Now, if you look at this chart here, this is a 1-year chart. And if you were to just put a major support trend line here over the course of the past year, you're going to see 1, 2, almost 3, 4, 5, 6, 7, 8, 9, let's say 7 times. If you had just bought this trend line 7 times this year with a bull debit call spread, which are easy to learn how to do, you would have made, if you had done it with 20 points outside of the money or 200 ticks, you would have made anywhere from 1,100, 1,000%, 1,100%, 2,000%, depending upon the risk that you wanted to take. You could just play this chart, this SPY chart, this year, and you wouldn't have to play any other stock. You could close everything that you have out there right now and just play SPY. And 7 times you would have won. You wouldn't have even lost. You would have just won 7 straight in a row. And if there was a major trend shift in SPY, and you're only betting 10 to 30% of your money, you would have lost once out of those 7 times. So you're talking 7 to 14,000%, 7,000 to 14,000%, depending on how you played it. and you might have lost another 1,000, 2,000% on an actual trend reversal. Had you even lost 500 or 1,000, or excuse me, 5,000%, you'd still be up 10,000 in 1 year. And that's how you create wealth. Now, how you lose that wealth is you do what I do. You day trade, you swing trade, you trade, monthlies, and you get greedy. But this is really the chart that you need to be making money to fund your misadventures, because this one is consistent. This is like a major trend support here. And then you draw in a major resistance. We already see that up here, right? You can see that major resistance. And you could even bring it lower. Let's say if you would have started it back here, and that's where that resistance is the whole year. You see that? And you could draw minor support and resistances as well for confirmation if you do actually want to enter these trades. And you probably would have started this one somewhere in here. And this line has been respected for the entire year. The same would go for tops as well. If you already know that the tops are coming, you're probably somewhere in here. So are you going long here, or are you going short here? When people say that, hey, are you going long? You'll know when to go long and when to go short. And you can play both of these. The bear case is less consistent than the bull case, and it's not as frequent as the bull case. You can see here, on an upward trend over time, the bear case doesn't work. If this was in reverse and we were in a bear trend down, a bear market, you would say the same thing in the inverse, that the easier money would be on the downside. So the bull case does work. At this time it works. So at any rate, right now this is where we are. Would you go long here? And the answer is no. Did I go long right here? I did, and I posted about it on Twitter, and I had a lot of people follow me on those plays. But this put 20 or 200 handles on the board this run. Do I need to get 450? No. Do most other successful traders, small hedge funds, large banks need to get the other 10? Some do. Some are the ones that know that they can sell the market. But we're just, retail traders, regular Joe on the street. This is enough for me to get my fill. This took, how long? This took 6/18 to 7/13. So if you're placing month or 2 month out, slightly outside, if you're placing, let's say here at I think this is 421 is where it tagged, and you were just to buy this line right here, knowing we're getting up there, you would have bought 438, 437, 438 debit call spreads, and you got paid. And now wherever we are in this area, I know eventually this is coming down. It's just a matter of timing when it comes down, right? And even if I wanted to wait, I could wait until it comes back down to get back in again. And I already know that we're at the end of summer. We already know that September and October are traditionally down months for the stock market. So I could go short here, put a 2 or 3 month out put spread option out here, and I guarantee at some point that thing's going to print. And if I put it somewhere along this line, a month or two out, let's say I put it right here at just 440, spread that's dated 2-3 months out, I'm telling you that thing is going to print eventually, no matter what. No matter what, if I'm day trading, we could still be going up, and I could day trade in this long and still get paid on the way down in the future. So this is the money maker. This is where you make your money, the SPY. You could make it an SPX. You could make it an ES. I choose the SPY. You pick your poison. But one of these right here, one of these three, SPX, SPY, or ES, is going to do it for you. And that's how you stay in this game. The second thing that you would do is you're going to find a favorite stock that you play. Sometimes these ETFs will go sideways. They consolidate for days, weeks, and other stocks will be running. And you're like, hey, I want to go play Tesla right now. Or I want to go play Apple right now. I want to go play Amazon. What you do is you trade one of those stocks consistently over the course of time, 3 months, 6 months, a year, and you move from the big caps that are still high liquidity that everyone knows, and you play those stocks for a determined period of time so you can get to know the ins and outs of them. And there are some that people favor to trade regularly. And when you start to trade more than a few, you're able to jump off of SPY on a sideways week, let's say, and go trade Facebook because you know how it trades, or you trade Apple because you know how it trades. One of the popular ones is Amazon. So if we take a look at Amazon, it's known for trading sideways, right? Trades sideways for almost an entire year. So this year, had you put a major support line here, and if you'd put another one a little bit tighter up here somewhere, and let's say you put one right here, you put one in the high range right here, and you could set an alert. You can right click on this one. I think this is how you create alert in Webull, and it's price below, and I save it. Oh no, price above. So this one's supposed to be price above. Create alert. It's price above. And this one here you do create alert for price below. I don't know if I did those right, but you get in the gist, right? So if you have a price below here and a price above here, I'll get an email or a text saying we're in this zone. So this whole year, I would have been alerted here 1, 2, 3, 4 times to make this run here. Now, we're looking like, Amazon's looking like it's heading up into a new trading range. ER will decide if it does head into a new trading range. I wouldn't trade this at all or play this because I'd already made my money 4 times this year. And you can continue to add these big caps in here. You'd do this for Amazon, you'd do this for Apple, you'd do this for Facebook. And you'd pick one at a time and you'd play them on weeklies, dailies while you're inside of this. If you were to buy this right here, you know you can also come in, you buy the spreads, and then you know that inside of this you can play day trades, weekly trades, and capture even more profit. So you've got that down. Now you're playing the SPY. They're funding your misadventures. Then you've got individual stocks that you can move out of SPY and play on weeklies and dailies and on some more spreads, taking on a little bit more risk with these trades here. And then let's say you're like, hey, I want to play GME. I want to play AMC. I want to play meme stonks, whatever the biggest favorite, most favorite one is, right? So you put GME in, you can put AMC in, you can go and find these stocks on trackers for Wall Street Bets, Twitter, whatever. And let's say GME is trending right now, and they're telling you to buy. You're not going to buy GME. You're going to come and you're going to start to chart it out, and you're going to decide that when the price comes to you that you're going to buy. So the first thing that you're looking for is doing a trend line here, because you can see that it's going down, right? You know that this stock is going down. And we'll come in a little bit closer. And this doesn't even have to be actually perfect, especially on this huge chart here. But you know that GME is trending down. And then you're going to want to put your support in, right? Your horizontal lines. You know that there were buyers here. You know that there were buyers somewhere in here. And you know that there was major support down here. And everyone says, hey, GME is going up, but here it doesn't look like it is. And you can see this is a bullish trend right here. You see these 3 red candles come down. Buyers step in, push it up. The bears want to check one more time in case it's going to go down. It gets rejected, and the bulls step back in and take it up. Now, we know we have sellers hiding up here, and they sold it down. They tried to get out from being trapped. You don't ever want to be buyers up in here. You want to be buyers down here. So you set 3 more alerts. First major support, second major support, third major support. And you get those alerts when it comes down here so that you can buy. If you were to be an owner of GME, you wanted to be an owner here when this tagged. This would have been your alert. And you want to be an owner down here. So if we come down for a next leg up, you can get out whenever you want to, and you're going to make as much money as you decide you want to make. And you already know buyers or sellers are hiding up here. So there's a fair chance of this coming down and testing deeper support to make more money and leave these buyers trapped unless they come up with more money to push this stock up to untrap themselves. And the last point I want to emphasize is by making these charts on multiple stocks over time, you're going to have 100, 200, 300 stocks that you did a basic chart for that you can come back, excuse me, you can come back to a month, 2 months, 3 months down the road, and you'll already know what's been going. You'll have some idea of what's been taking place. Are your support lines or your resistance lines working? If not, do you have to adjust them? Do you have to adjust where you find your support and resistance lines? It starts to self-teach you over time where to draw them and where to expect the drops to be. And if you don't think it's ever coming down here to 115 or 117 or 137 or 157, I guarantee you that it will. And I guarantee you if you do enough of these, eventually, if you've got 300 stocks that you're setting alerts on, they're going to start popping up inside of your email alert or your text messages once a day, 3 times a week, and you'll be ahead of the curve on these stocks meeting the conditions that you need to enter them. So you can start to add your meme stocks in here. And another place that you can, or other places you can find stocks to start charting and setting alerts on would be Twitter, Wall Street Bets, one of the trackers for Wall Street Bets. And I try to find the sleepers. So I'll come to FinViz, their scanner. And some people have complicated scanners that they run on FinViz. I just do a basic one. I'm looking for stock. I'll go to all over here. And it'll show me all the choices that I can make. And I'll just pick a 200-day simple moving average. I will pick price below. I try to catch them before they actually rip. Some people want to see that confirmation first. For me, I will chart these out, and then if I start to hear chatter on Wall Street Bets or Twitter or YouTube, it triggers in my mind when they are about to hit. I'll be like, oh, I just charted out this stock, and why is everybody just starting to talk about it now? And it still hasn't flipped, right? I started to see positive news pieces coming out. I'll also change the price so that it's high price descending, because I know these stocks are liquid mostly. I also know that people like to play them. I also know that people like Netflix here, Samuel Adams here, Zoom, Wayfair, Ring. You guys know all these stocks. I know most of you do. And these go for cyclicals as well. You can find good cyclicals in here. But let's just take a look at SAM. This is actually a good one to look at. So I see that it's just had its ER and then it's dropped off massively. We all know that. So let's just add SAM onto our charting. And this is actually a really good one. We're going to look at the max on Samuel Adams. This is an institution. This is, if you question if Tesla's ever coming down to 406 or 417, and all this took was poor guidance, or the CEO did not give I forget what it's called. It's not re-guidance, but he didn't come back out and say, we're going to change our guidance for this earnings release. And that's like legal fraud in a way. It's not illegal, but it's incompetence by the CEO. And so it's something that's simple can drop your stock a lot. And you can see they made it to 1349. People were buying Samuel Adams at 1349. I remember people rode this up, and they probably got trapped. Now, it probably leaked. He sold some stock, and I guess it was scheduled, invested. That doesn't matter. He got out of his stock, and the insiders knew that they didn't give new guidance before earnings release. So it sold down. But it sold down major on its ER day and fucked investors and fucked a lot of people. It wasn't cool. But if you don't think a stock can drop like that, it can, and this one did. So we're going to look at a slightly smaller time frame. Let's look at that 5-year real quick. Okay. And if I had told you, hey, you want to buy Sam Adams at 9, let's put a support there, right? 904. If I had said you want to buy it at 904, you would have said, hell yeah, I'll buy it right now. If I had then said to you, do you want to buy it down here somewhere, 763, you would have said there's no way it's ever going that low. If I had said to you, what about at, seven, or at, what if I had told you down here somewhere, 664, you would have said no way. But in reality, Sam Adams traded, at 374 in March of 2020. And actually, let's look back on 8/23, 2019. It traded at 445. That looks like it was its high. Same number was right over here in February, right? And then we started to get the truly carbonated beverages that came out. And this was a new revenue stream for Samuel Adams, and it was pumped up on that new revenue stream. Well, now it's not working out for them. They can't make inroads into bars and restaurants. It's like an epiphany. Everyone knows now that no one wants to drink Truly when they go to the bar. They want to get a nice craft beer. They want to get a nice house-made cocktail, that kind of stuff. So that revenue stream is not what it was promised to be. So had we set some alerts for this stock, they would have triggered. And so most of these stocks, I'll trade one that's really low. I'll trade, I'll place a GME that's way down here. $44 could happen easily. At any moment, GME or any other stock could have bad news. That'll dump it. So set these with alerts. You can see here, you've got the 200A coming in. It's going to tap it. So I'm going to set this last one right on the 200A, and I'm going to set an alert on Samuel Adams to go long. Right, create a new alert. Price below that it tags. And if it tags here, I'm going to start to track Samuel Adams for a bounce. Do I think it's ever coming back up here? Maybe. I bet you that this is the top of the trading range. I bet you the bottom of the trading range, though, is now somewhere down here. I would bet. I bet it trades in here until either the CEO is replaced or new guidance is issued, new revenue stream. It could just tap down here. And then eventually, I bet eventually, even if it was just on a fishing expedition for one day, that the banks will sell down fishing for a low price. And they do this often, very briefly. So you could even just set a buy alert here at 572. And if it fills, it fills. If it doesn't fill, it doesn't fill. But if you have 300 of these stocks with these price alerts, I guarantee some of them are going to fill. And this is a place you can find it. Or you can start to set these on FinViz. You can come back and you can set them for Netflix. And we just had an ER that was bad for them as well. So you set something nice and low on them. Same with Zoom, Wayfair, Ring. That's 5 charts for you to make alerts on. And this is the basics. This is how you trade basic. And if you trade basic like this, I'm telling, especially if you start with the SPY, you are going to make money. You are going to, over time, make more than you lose. And, people try to complicate these. People overcomplicate trading, and it does not need to be overcomplicated. And that's when I post on Twitter when, where, and how to buy. And they come out pretty good. I mean, I probably have a 70% win rate on Twitter and just day trading stuff or like weeklies. I have a pretty good win rate there. It's not the best, it's not the worst, but I know my big ones when I see companies like Boeing hit these support lines. When SPY hit the support line on the 19th, I called for a buy at that support. And there are other factors that impact if you should be buying there. But, with a spread, it could still go down. It could, you can see here that it dips even lower on October 30th. We got one last big down day, I think it was like a down week or something, if I recall. But when we had this last little dip, it still recovered. And a spread's going to save you in case that happens. So let's just say on the 19th, we dipped down to 418, or let's say we went down to 410. It's eventually going to come back and print what you wanted it to print. I hope this helps. I'm going to try to continue to release more videos over time, like a daily brief, so that you can see the conditions of the market and know if you should be bullish or bearish. And that's another thing, is try not to get trapped in being a bull or a bear. I mean, it's a really hard thing to do, but at some point, you have to do it. And when it comes to like Twitter and YouTube, you know, I just started muting some of these guys. The Ultra Bulls, I muted them. The Ultra Bears, I muted them. And I tried to find actual traders that traded ES, traders that traded multiple stocks. They didn't fall in love with one stock. If you can only trade Tesla, you're not really a trader. You really aren't. You got to be able to trade Tesla, Facebook, Apple, Boeing, cyclical stocks. It doesn't matter. You have to be able to make those shifts and find out where the money is at. So don't get pigeonholed. Don't fall in love with a stock. Fall in love with ES if you want to. Fall in love with SPY, because that's going to be your bread and butter, no matter what. And try to stay out of those holes. I mean, you might not do this, but I'll tell you what. It works. It has worked for me a couple times in the past where I overcomplicated my trading, and I just had to pull back. I had to pull everything out, and I had to reset. If you want to get, running in the stock market or stay trading every day, just take a break. Go hiking, go biking, go sailing, go do something else, and set an alert or watch SPY every day for when it's going to come back down to this buy area. And I'll tell you what, if you dumped all of your money, or not all of it, but if you want to grow your account, you can. But the key would be to buy at that point when you're getting back into the market, is you just spend 30% of your money on some spreads. They're long dated, 1-3 months out, and you see if they're going to hit. But we are coming into a down season. September, October is known to be a down season. So you could even turn bearish if you want. But the key here, though, is when you hit these levels down here, they still print. They still print in October as well. So when you come back even a year before, 2019, 2018, seasonally, they still print it. Okay? So I think that's all I got. I hope you like this video. Please like and subscribe it. I'll never charge you for anything. You'll never see me peddling anything to you. Trying to get you to buy courses, that kind of stuff. I just want other traders to be able to make money, to get into this. And, the retail movement is going to become, I would say, a third of what this market is over time. We're at the first stages of it, and the big boys just want you to dump your money in and not take any of it out. And I've had that happen. I've lost in this market. I understand the feeling, the rage that it induces. It can be crippling. It can even get you to quit this market. And I don't want you to quit this market. I want you to have an option in life outside of being one of the worker drones. Once you start to make real money, you're going to realize that engineers or worker drones, most people in this country, even if they're making six figures, like 100,000, 300,000, 500,000 a year, these guys they're drones. That's what they are. If you are blessed, or if you have the chance to become a stock trader and one that makes consistent money, you'll be beholden to no one. You'll be able to do anything you want with your life. You can travel and work. You can work and quit for a month, 3 months. You can take vacations and go wherever you want. Life is good as a trader, especially if you trade on balance. If you trade when you should be trading and don't trade when you shouldn't be trading, you're only going to make a lot of money. I mean, this plain SPY like this can make you a millionaire with 10 grand in a year. It really can. If you stick with it, you can make a lot of money. You can compound those gains very fast. And they'll tell you, hey, we're not going to have another 2020, but you know what? No, we're not going to have another 2020, but right now we're having it in 2021 again. So when these bears talk to you and tell you that you can't make money in this market, it's going to get harder to make money in this market, none of this is true. It's all bullshit. All right? Good luck out there, and have a great Monday.